Now, personal income tax, of course, that affects everybody. So there are some changes to the marginal tax rates, and I'll just carefully work through those. So you'd all be aware that according to our marginal tax rate, the first $6,000 of anybody's income that's a resident of Australia is tax-free. So from $6,000 through to about $37,000, the rate of tax is 15% currently. Well, what's going to happen is the tax-free rate is going to be increased from $6,000 to $18,000 next year. Sounds pretty good, that, doesn't it? But I'll qualify that in a subsequent slide. So the tax-free threshold increases from $6,000 to $18,000. The rate, however, after you're above that $18,000 is going to increase to 19%. Now, there's another small subsequent change when it changes from the fixed pricing period to the government auction period in 2015. The second threshold, as it stands now, is you're taxed at 30% on every dollar above your income being $37,000. Now that's going to change to being 32.5% above $37,000, and then it just changes again marginally in 2015. So we've got a significant increase in the tax-free threshold, but we've got higher rates of tax between $18,000, $19,000 and $37,000, and again higher rates of tax between $37,000 and the next threshold is about $85,000. So there is a slight nuance to that in that the current system includes what's called the low income tax offset. Now that amends the tax-free threshold, because actually now if you could earn up to $15,000 or $16,000 without paying any tax. So really what we're looking at is that tax-free threshold will increase from $16,000 to about $20,000. So it's not quite as good as it looks just looking at the raw figure. The government states that somebody on around the $30,000 income will be about $600 a year better off in paying less tax. Someone on about $65,000 would be about $300 less tax per year. But of course, and someone that's on $85,000 won't be any better off. All of those people will be paying higher electricity prices though. Okay, so there's some increases in welfare payments because, of course, if you're a recipient of a government pension, tax doesn't really, changes in tax rates don't mean a lot. The age pension goes up by about 1.7%, and there are some advance payments that will come through prior to July next year. Family tax benefits, there's Family Tax Benefit A and Family Tax Benefit B, and they go up of that same of an amount about that same order. Now, self-funded retirees also may be affected by that. Depending on certain circumstances, if your income as a self-funded retiree is of a similar nature to what an age pensioner would get, you may be eligible to receive a supplement of $510.